Hello, everyone. My name is Trent Meyer, and thank you for joining us on this beautiful Tuesday morning. Just a quick note before we get started here. We do have everyone on mute today, but we certainly encourage any and all questions you might have. If you do have any questions during the webinar, please ask those by using the Q&A button at the bottom of your screen. If you are using an iPad, it's a little bit different. You'll need to just tap the top of your screen. There'll be a drop down that appears, and the Q&A option will be in there. And I will be collecting those questions as we go, and I'll probably stop Joe in the middle and ask him if they're relevant to the topic he's discussing. But now, without further ado, it's my pleasure to introduce our speaker today, Mr. Joe Sullivan. Joe's the CEO and founder of Market Insights, Inc., a consulting firm with expertise in market assessments, delivery system planning, strategic planning, branding, marketing, and culture transformation. As a consultant, author, and professional speaker with more than 25 years of experience, the themes of growth, innovation, and motivation can be found throughout Joe's work. He has been invited to share his insights with international, national, regional, and state associations and leagues as a keynote and workshop presenter, and he is on the current faculty of the Graduate School of Banking at University of Wisconsin and the Ohio Bankers League Management School. He has presented to hundreds of audiences on topics ranging from human connection, disruption, consumer trends, delivery system planning, marketing, leadership, and the future of banking. Today, Joe's going to be talking to us about the post-pandemic consumer and how to bank them. Welcome, Joe. Quite the resume there.
Trent, thank you very much, and welcome everyone. First, I want to say, Trent, not only thank you to you, but to Susan and Jamie and the entire team that helped get me prepared for today's webinar, and all the work and the creativity and the flexibility and how you've delivered your programs for the last year and a half. So thank you for all of that. And the only other thing I'm going to say about me that perhaps you may or may not want to know is I'm also a licensed psychotherapist, and I have had this fascination and curiosity about the human connection and the human condition and how things have changed for the consumer during the pandemic. So we're going to talk about that. But I want to thank you, the audience, for your resiliency, for your own creativity, for your adaptability, and for your heart, for taking care of your customers and solving problems really quickly and pivoting maybe faster than you ever thought that you could. And I want to remind you that those skills that you learned during pandemic at how to run your business and how to connect with your consumers, that we are just getting started. So those skills that you learn, I hope that you will take them moving forward. And I want you also to think of this, that your job is so much bigger than the title that perhaps is printed on your business card, because you're a leader and a problem solver and a helper and a collaborator, and you're helping your consumers to rebuild their lives. Now, in just a few minutes, I'm going to share my slide deck, and some of the slides that I'm going to share might seem a little, pardon me, my etches there, might seem a little bit disconcerting or not great news. And I invite you to look at it a little bit differently. It's not doom and gloom. This is factual data that I think it's important for you to know, but also I want you to consider it to be your course of action. Now, the title of this presentation, The Post-Pandemic Consumer and How to Bank Them. How successful you are at living the phrase that is the title of this presentation will really depend on how you manage three things. The first is this. I invite you to lead with empathy. Your consumers, whether they're a small business or a young family or a retiree, their financial picture might have changed. They've had some challenges and roadblocks in the last year and a half, and they're looking for your help, not your sympathy, in how to move forward. So leading with empathy is a business imperative. The second thing is I want you to embrace agility and flexibility. You must think, decide, and make all of your decisions and take action quicker. So these should be your mantra about agility and flexibility, and not getting stuck in the legacy ways of doing things that perhaps your bank or your credit union has done for the last decade or two. And finally, the third thing is I want you to practice radical authenticity. And, if nothing else, all of us as consumers, you and me and every one of your customers, we have an especially potent BS detector, I think, these days, and we can see through when people and businesses and brands are not being authentic. So As consumers, your customers, your small business customers, they want to engage with people and brands and banks and credit unions that are radically authentic. So taking from the top again, I want you to think of three things: lead with empathy, embrace agility and adaptability, and practice radical authenticity. So I want you to take those and use them as yours. Now, I'm going to go through some slides. And as Trent had mentioned, I would much rather have you ask a question along the way. Trent is going to be managing the chat box, but if you want to unmute yourself and ask a question, I think that there's some possibility for that. And the only thing that would stop us is if we run out of time, because I don't want to outwear my welcome. So here we go. I'm going to share my slide deck, and Trent, just let me know that we got this up okay. And here we go. All right. Can you see the slides? Just give me a yay on that.
Yep, looks good.
Okay, that's always a good sign as a speaker. We always want to make sure that the technology works. I speak about technology, but when it doesn't work, I get a little cranky. So the post-pandemic consumer, and you are probably really sick of hearing those words, I'm guessing. So forget what the words of the presentation are about and think, do I really know the customer that I'm serving or the member that I'm serving? Do I know how their financial picture has changed? Do I know how the forces that have impacted our economy and our world have impacted our customers? And are we doing the right things that they need from us right now, as opposed to something from 2019? So here we go. All right, there we go. Now, it's like a puzzle, and I'm going to talk about trends in four key areas: the economy, the demographics, the technology, and the psychosocial. And I'll explain more of those. But this is the piece of the puzzle. And it doesn't matter if you're in Topeka or Hays, Kansas, or Oklahoma City, or suburban Denver on the Front Range, or Lincoln, Nebraska. These factors are playing out with your consumers in your markets to varying degrees along the way. And the first thing that you need to do to understand and bank the post-pandemic consumer is to understand and embrace the trends that are impacting their lives and your market area. So they're all interdependent, they change, they flux, and things will continue to move along. So I want to start with the economy a little bit. Consumer behavior is obviously partially influenced by the economic situation in a market area. A rising tide lifts all boats. If the stock market and the economy is doing well, generally many people in your market and your customer base will be doing well. Or what you might have seen during the pandemic, maybe you had a lot of essential workers and you had restaurants that you were trying to bank, and they had a little bit of a trouble there. They were having some issues with how to move forward. So the pandemic didn't just sometimes cripple the economy or slow it down. It has transformed it. So even if you think about your own strategic planning process right now, if you are planning and thinking of doing things the way that you planned and did them in 2019, you might be off the mark, and you might be leaving huge opportunities and unmet needs on the table. And I don't want you to miss those. So just recognize that the economy is obviously a big moving flag. And what was it yesterday? We heard, the news about the stock market. But what I want to do is I want to pull back from the economy, and I want to share a little bit about a great book that I read. There's a man named Aaron Hurst, and he wrote a book called The Purpose Economy. And I found out about his book 6 or 7 years back when he first wrote it, because I teach a workshop called Purpose, Passion, and Profit. And what I like about this slide in particular, which was an infographic from the book, and he said this, he said, as a society, we started out in this country as an agrarian economy, a farming economy, and people worked with their hands. They were out in the field. They worked from sunup to sundown. And many of you in Kansas and Nebraska, many of you are banking farmers and farming communities, and some of that is very alive and well. But what he was saying here basically is that we worked with our hands, and the average life expectancy back during the agrarian economy was something like age 40. And then what happened? Then along came the Industrial Revolution, and some of the workers came off the farms and they went into a factory, and Henry Ford made the first Model T off the production line. And he said, you know what? I want everybody that works for Ford Motor Company to be able to afford to buy their own Model T. But the idea is that we worked, some with our hands, but we started to work with machines and mass production. And life expectancy went up, and quality of living went up, and people's wages went up. And so again, the economy shifted a bit. And then we moved into the information economy. And in some ways, that's where we are right now. And we, again, some of us stepped out of the factory and we started working less with our hands and more with our brains. Now, we always work with our brains, but I think you get the analogy. So the information economy, it allowed us to do what we are doing right now, to have a webinar, to attend the virtual conferences that you did, to attend the many virtual potlucks or cocktail parties or church services that you did in the last year and a half. And the information economy, again, raised wages, connected all of us in different parts of the world, not to mention the US. And again, it was about knowledge and creativity and innovation. And then what he's proposing, and I wholeheartedly agree, is this, that along came the purpose economy. And the purpose economy is basically saying that people are going to engage with brands, not so much based on cost and utility, but where it adds meaning to their life. So think about that for a second, where it adds meaning to their life. So people are looking for a deeper meaning, a deeper connection, a sense of well-being, a sense of being in touch with others. So some of the words, as a matter of fact, of this purpose economy have worked their way in banking. So let me share just a few of those. Financial well-being, empathy, as I'd already mentioned, sustainability, and employee engagement. So some of these ideas of the purpose economy are working our way in. And it doesn't matter if you live in a farming economy of 500 people, or you're in Metro Oklahoma City or Kansas City. Some of these, again, the economy continues to evolve. And I think that's always an important place to recognize. Now, I want to bring up some other things that are headwinds that we're dealing with. And what I want you to consider that puzzle again. These are pieces that all of us as leaders in the industry, regardless of the industry that we work for, that we need to keep an eye on. And so here we go. Now, I'm not getting political in this statement at all, but Pew Research has been tracking the middle class for decades now. And, I think that happens to be the All in the Family TV show. And the only reason I put that up as the background is that it brought up controversial issues that made us all uncomfortable. Okay, so not trying to make you feel too uncomfortable. But what the Pew article was saying here, and the research is saying, is that the middle class wages have stagnated and growing only 6% over the last 40 years. Now, just some other things to keep in mind here, that the pandemic erased a year of growth in global living standards, while also setting back progress on reducing poverty by several years. So the reason I'm bringing this up is to get you thinking. When I said to you that your role at your credit union or your bank is so much deeper and so much more profound and so much more important than whatever title is printed on your business card, because what we have to do is connect the dots between some of the Pew research and what we see on the ground and the conversations that you have with customers and what's going on with the farms or the small businesses or the tech startups if you're in Lincoln or wherever. And all these things, we have to keep an eye on all these trends to say, how is this impacting our customer? Because we cannot bank the post-pandemic consumer if we don't understand what's going on in their lives. So what we've seen, thank goodness, in some ways, is that, when you look at some of the polling that's been done, and they looked at the spring of 2020 in light green and the spring of 2021 in dark green, and they asked a number of questions. They asked people going left to right here, the COVID-19 pandemic will have a negative impact on my quality of life long term. So what you're seeing is that the 2021 number is higher. The second one is I'm financially prepared to handle the economic impacts of the pandemic. And again, that number dropped from last year. And then finally, in terms of people's health and well-being, and my screen's a little covered up with people I'm cascading on the right side here. So, but the point of the slide is this: we are, as a society as a whole, a little less concerned about physical health and more concerned about our finances. And that's where you come into the picture. Because if people are still concerned about long-term financial health, concerned about debt, concerned about financial well-being, these are things that you are eminently qualified to handle. So again, that mantra, your job is so much more important than just the title on your business card, because what you have the opportunity to do is to help people change the trajectory of their finances, improve their physical, or not their physical health, but their financial health, and so forth. So again, what we're starting to allude to here is tapping into the mindset of people. All right, hold on, I went in the wrong direction here. Sorry about that. Okay, 51% of US adults say that the economic impact of the pandemic will make it more difficult for them to achieve their financial goals. So it doesn't matter whether you have a wealth management division at your bank or credit union, or you do that through a CUSO. What we're getting at is that people are feeling that they're behind. And again, you have such skill sets and such gifts in what you do that I want you to start having conversations with customers. And so maybe you don't know where they are. So sometimes it's as simple as setting up a Zoom with them, talking to them as they walk into your branch, picking up the phone and calling them, or having a text conversation about where they're at. So, if you research, again, I think it's important to say, again, that half the adults are coming up with the idea that they're concerned about their long-term picture. Now, I want to shift a little bit because we've talked a little bit.
Hey, Joe, real quick. I think we had a question come in that kind of related to that last slide. They asked, oh, sorry.
There we go.
They asked, you talk about COVID's huge impact on these consumer finances and how they should be able to help. How do they start that conversation, though, where, their customers may be a little bit reluctant to reach out to them for help? Right. I think that's where the question was coming from.
Yeah. And, money can be, unfortunately, a shame-producing experience. So I'm going to share 3 questions that I've been encouraging our clients to ask their customers all through the pandemic and even afterwards. Number 1, how are you doing? So just checking in with them. How are you doing? They can answer that however they want. Physical health, worried about the kids, excited about the future, but you're showing that you care. Number 2, tell us about a financial challenge or opportunity that you have, and how can we help? So there you're getting into your problem-solving mode. And then number 3, ask them the question, what are they most excited about doing once the pandemic restrictions continue to lift? And we're kind of in that place right now. So what you're doing is you're giving them hope. But I think that one of the easiest things we can do is just to engage people in conversation. So as I mentioned, you can do it in the branch, on the phone, via chatbot, via Zoom meeting, whatever, but you have to ask them. And if you ask them those 3 questions, you're going to show that you care. You're going to show them that you can help solve problems. And 3, you're going to give them hope for the future. So Trent, I hope that answered it.
Yeah, that was great. Thank you.
Okay. All right. So let's talk a little bit about demographics. Now, I was just last week, I was at the Central States Bankers Conference, which is a group of 17 of the state associations in the center of the country, going from North Dakota down to Texas, basically. And I talked to them about demographics as well. And the states in the center are not like New York or California or Washington State, where I happen to be calling you in from. But there are demographic shifts. And the one thing I want you to consider is that regardless of whether, if you are in a town that is growing, maybe you're in Johnson County, Kansas, which has historically always been in the top 10 or 20 in terms of growth in the country, in terms of counties, or you're in Hayes or Manhattan or Hutchinson, Kansas, where maybe things aren't growing as much. But either way, your customers have needs. So let's talk about some of the data here. Now, this is just in the last year, and this is kind of some of that more sobering stuff that I promised to tell you that I want you to think about as a call to action. So you might say, well, I'm glad I'm not in Illinois or Mississippi or West Virginia, so I'm off the hook. Well, this is just looking at population trends over the last year. And I'm going to switch my glasses here because I've got some really good notes here on this one. What I want you to consider is this, that there is this micro trend that's going on according to the Brookings Institute. It's called the Great Reshuffling. And the micro trend said this: okay, I'm tired of being cooped up during the pandemic in my 2-bedroom apartment or condo or my small house. I want to buy a bigger place that has a 3rd or 4th bedroom where I have got more backyard space for the kids. And I want to have a Zoom room dedicated at home so I can work more diligently at home. And so what's happening is that people, during the last recession, the exurbs, as they're called, exurbs are far out suburbs. And during the last recession in 2008, those communities tanked and people left them in droves and they came back more toward the city. During this pandemic, that trend reversed itself. So that's what they refer to as the micro trend. There's been a flight of white collar workers to the exurbs in search of more affordable housing. But they also want to be within driving distance of a major metro area or Topeka or wherever, so that if their boss says, okay, we're going back to some hybrid working model and you have to be in the office 2 days a week, that they don't have to spend 2 hours in the car to do so. But what's interesting about this is that people, they moved away from maybe their more closer in suburb or closer in town, and maybe their home is more expensive. They sold it. And so they've stockpiled a little money. They bought a place that's further out. They didn't spend a lot of money during the recession, the pandemic-reduced recession, and they saved more money. Their credit score went up. And so you have this whole emerging demographic trend. So this plays out. This isn't just New York, Chicago, or San Francisco. This is your town as well. So you have to look at how are things being shuffled around in your marketplace. You know, people are moving maybe further away where they can, again, have more space. So your job is to understand that there's a migration to more low density areas. And you might say, I'm a farming economy, so that fits us anyway. But you have to just pay attention to the trends. And that's the whole point in my making that comment. Now, let's see what else. I think I'm going to skip through there. Here are the fastest growing exurbs in every state between 2010 and 2019. And even like in my state of Washington, as an example, it's not Seattle or Bellevue or Portland, or it's not Portland, I'm sorry, or Spokane, it's Walla Walla. And you might say, I've never heard of Walla Walla. They have a prison there and they make wine. Okay, all right, back to the point, is that the demography is changing. And so this center part of the country that you're a part of, you're going through the center, there are pockets of growth. There are pockets of where people are living and working differently, and you need to understand that. So maybe another question that you're asking your customers right now, tell us about your living situation. Are you planning to stay in your home? Are you planning to move to a different community or to a bigger home? And you know, you're not just trying to hit them up for a mortgage, you're trying to just understand how their life has changed. So population trends, you know, we have the graying of America, but what we have are relocation of the population centers based on the graph that I just showed you. And you can see the split between men, and women are historically always living longer, regardless of age bucket. But we also know that there's a huge cohort of people above the age of 85. Yes, I said 85. But get this, according to the census data, they project that between 2020 and 2060, the number of older Americans will increase by 69% from 56 million to 95 million. So what you also need to be prepared for is a consumer that's older. And yes, we have an emerging Gen Z and millennials, which take up the majority of the workforce. But what I'm inviting you to do is to look at each demographic bucket. The Gen Z, basically people 27 and under. Millennials, age 27 to 41. And Gen X, 41 to 55, and boomers, 56 to 74, you get the drift. So just understanding these demographic trends. But the census has also been revealing that, again, we have the slowest annual average growth rate as a country in this past decade than we've had since the 1930s. And that is a combination of people getting married later, delaying having children till later, changes in migration, the need for two-income households. All these things are impacting basically the size and the demographic makeup of your community. Now, I want to bring up one more. I want to talk about more the aging population, and specifically older Americans. Borrowers ages 50 to 64 are buried in student debt. And I did not quote that incorrectly. I did quote that correctly. Now, what seniors are looking at doing, so let's just round the number and say age 60 plus, just for sake of purposes here. They're dealing with multiple things. They face an uncertain future. They have less insufficient savings, rising healthcare costs, caregiving costs, lack of retirement fund, and in many cases, they are paying the student loans of their children or grandchildren. So what you have are a generation that is steeped in somewhat some financial issues that you are eminently qualified to help with. Now, I'm getting all these demographic things out of the way up front. So you say, oh my gosh, we are in big trouble. Every challenge that I'm laying out here in terms of demographics or economics is something that you can help with. So I want you to think differently. When you look at your markets and you look at the data and you say you don't have the data, then you can pull free census data off census.gov. There's data all over the place. But this increased indebtedness of people above the age of 60 and even above the age of 70 is primarily due to student loans and mortgages. So you're going to have to look at more flexible ways to help them get to financial health, and whether that's changes in products or reverse mortgages or what have you. This is about taking a new and fresh look at your market area and what the demographics are telling you. Now, what does all of this mean? So I mentioned that we have kind of one of the slowest birth rates and annual population growth rates since the 1930s. It means that we have fewer people. Yes, there is a positive growth, but we have fewer people means fewer people buying anything: cars, homes, cell phones, vacations. We have a less fortunate middle class and a more prosperous luxury class. So in other words, not getting political on this, but there is a bigger divide between the super wealthy and people that are just getting by. We have more multi-generational households. That is very, very prevalent in farming communities. In the state of Kansas, it's very prevalent. So by 2034, they're saying that the number of older Americans will outnumber younger children for the first time in history. So we have lots of young adults, Gen Z and millennials, but fewer young children. We have a slower wealth buildup. And I want you to think about that for a second, because every one of the demographic trends that I just said to you is speaking to that. So to the extent that you have financial planning services, wealth advisory services, insurance services, core traditional banking services, these are all things in the right combination based on the needs of your consumers, are things that you can help them with. And finally, we have more phones, multiple phones sometimes per person, and fewer cars. Now you might say, well, not in the towns where I live, but these are general trends. And take a look at these 7 bullet points and say, how are these playing out in the markets that we serve? All right. Now let's go on to psychosocial. And you might say, well, what is psychosocial? And I think I have a good graph in there. Great. Yes. So as a result of the pandemic, the way people think and process information and the emotional content behind their financial decisions has changed. So what I want to get at is I want to introduce you to the concept of psychographic segmentation. What that means is demographics are great, age and income and birth rates and population growth, those are all fine, but we need to tap into how people think and feel. So I'm going to show you this through a story. Now, what I'm showing in front of you is a company called Claritas, which we do for a number of our clients, and they do a retail segmentation system. And what it does is it basically groups your customers by household into the younger years category, the family life years category, and the mature. And it looks at degree of affluence, presence of children in the household, what they buy, what banking services they use, whether they use mobile product, whether they deposit their check on a mobile device, and so forth. But what it does is it gets into financial behavior, purchasing motivation, social media that they use, whether they listen to NPR or read the Wall Street Journal or your local newspaper, and it gets into how people are thinking and feeling. But here's the story I want to share. So a number of years back, we were working with a mutual institution. And by mutual, by their very nature, they're very deposit driven. Their customer profile tends to skew older. So we asked this bank, tell us about your customers. And they said, they're older and they don't have many mortgages with us, very few credit needs, which is a true statement. So we ran their 20,000 households through the segmentation system, and we found out that the key life stage that they actually had within their customer was this, what we call Y1 that I'm pointing to here. It is kind of a young, upwardly mobile, tech-savvy customer. Yet they were assuming that the lion's share of their customers were older. And indeed, 15% of their customers fell into this younger category. And what it spurned is a whole set of conversations. It changed some of the products that they were offering. It changed the role of their marketing person. They added a person in charge of digital services, but understanding who they actually serve instead of actually working from hypotheticals and assumption allowed them to make some concrete choices about markets. And now this bank is rocking and rolling in terms of its digital suite, its online account opening, and its mobile services. So knowledge is power. So understanding who your customers are is critical. Now, I mentioned this earlier, but the industry has moved and made leaps and bounds in the last 15 months. Think about the things you've had to do. You had to maybe get more customers using your mobile app. You had to, for a while when your branch lobbies were closed, you had to get people using your drive-through. Maybe you use or implemented ITMs, interactive teller machines. But according to McKinsey, the industry vaulted ahead 5 years in consumer and digital adoption in just 8 weeks. So there is a new high watermark where, maybe you saw on average a 30% spike in people using your mobile app. And then what happened is your branch lobbies opened up and that number dropped back a bit. The new high watermark is between 15 and 20% higher. So never let a crisis go to waste. But obviously you're going to have to pay attention to things like security and problem solving and customer service. And so we'll talk more about that. But get this, only 1 in 4 consumers say that they get help from their bank, from their customer service representative when they call. So if 1 in 4 thinks they're getting it, what are the other 3 thinking that they're not? So you're going to need to pay attention to not one of those self-aggrandizing statements of we give great customer service and our customers love us, but really saying they're not feeling like you're helping them. They don't feel like they can get in touch with you. So part of banking the post-pandemic consumer with all the challenges and the opportunities that they have is making sure that you are available to them. Now, let's talk about trust a little bit. Trust historically, and still is, banks have the highest, and credit unions here, have the highest degree of trust by their customers of all industries. If you look at, high tech or big retail, banking is still ahead. However, the trust is eroding. And so you can look at it by age group and you can look at it by the kind of primary institution that they have. But what's important to know is that the trust is starting to slip regardless of demographic cohort. And many of the cohorts here have more trust in a fintech than they do their primary bank. So I just want you to stare at this a little bit, because regardless of age group, it's starting to wane a little bit. So you need to be a good guardian of this trust, because people there, and how do you build trust? By giving them steady, consistent, and good information. So again, I think trust is just something you need to pay attention to. But the other thing to consider is that consumers of all cohorts are kind of what I'd call switchy. So according to some research by 2 companies that I'm going to quote here, Rival being one, they surveyed about 100,000 customers between November and January, and they found out that 17%, and these weren't customers, these were consumers, 17% of households and 31% of businesses had the intention and plan to switch banks in the coming year, which means 2021. And further, a survey by Mobiquity, which is a digital consulting firm, they surveyed about 2,500 people in January, and they found out that 11% of consumers had already switched banks, and the majority of those were millennials. So the moral of the story here, and the reason I'm sharing the graph, is that yes, even the dark gray graph, the millennials, the boomers and Gen Z are also switching. And yes, more young people are switching, more millennials are switching, but everybody is switching. So if 17% of your retail customers and 31% of your business customers decided to never come back, would you be prepared for that? And what are you doing to preserve that relationship, to help them? So one of the things I want you to remember is to never take anything for granted. Because during the pandemic, people formed new habits. According to a research that was published in Psychology Today more than a decade ago, that it takes on average 66 days for a new behavior to become a habit. Well, they've been using your drive-through and your mobile app and depositing checks for over a year now. So why would we assume that they might want to just come back to doing things the way they were? So we can never take our customers for granted. Now, let's talk a little bit about technology. We could do a whole day on technology, and I'm not a tech guy. I'm going to talk about technology through the lens of the consumer, excuse me. So bots and biometrics and video to voice, technology has always had the power to disrupt and fundamentally change the way that we live and the way that we bank and the way that we work. So, you know, whether it was the first drive-through in 1938 or the first ATM in 1969 or that funny looking first mobile phone in 1995, you can see what's going on. We adapt. Regardless of the adapt or the branchless banking, we continue to adapt. So I said to you at the beginning, you are resilient. And I want you to remember that. And the things that you've done and the things that you've learned about yourself are going to propel you forward. And your customers are just really thirsty for you to do that and to help them do that. So don't ever say, my bank, my board, my credit union, our senior management team, well, they're just really resistant to change. I say that the data tells otherwise. Now, all right, let's talk a little bit about voice. How many of you talk to Siri or Alexa every day? I know a number of you probably have at least one smart speaker in your house. So I want to share some stats with you. You know, we're in kind of what I call this conversational economy, this voice-activated world that we live in, this hands-free economy. We don't want to touch anything. That was during the pandemic, you know, nobody wanted to touch the touchscreen. But here's the way I want you to consider this. In this hands-free, touchless to some degree society that we live in, this voice-activated economy, does your strategy account for any of the following? That 30% of all websites right now are conducted without a screen. Think about that. That half of all search queries will be voice-based within 5 years. And right now, 1/3 of the 3.5 billion Google searches every day are done via voice. That virtual assistants like Alexa and so forth, they're gaining in popularity. In fact, something like 67 million Americans have at least one smart speaker in their house. And if they have a smart speaker, they're using a digital assistant. And if they're using a digital assistant, they can access you, provided that you are optimized for voice search. So your investment in voice is critical. And just think about the conversations that we've had. I'm going to get to video in just a minute. So consider this. 132 billion minutes of video are streaming every week in the United States. Consider some of these trends. That on average in 2021, each American consumer will spend 140 minutes a day on digital video every single day. And that does not include Netflix. So why am I saying that? That whether you had Zoom cocktail hours or Zoom motivational check-ins with your team every week, or a Zoom family reunion, or a Zoom wedding, or heaven forbid, even a Zoom memorial service, we're getting used to video. So we have more trust when we can see people face to face. So what I want to say about technology is this. Your investment in video and voice is critical, and your use of data in terms of mining information about your customers and the market areas to provide a more personalized banking experience and to provide the service or the product that you are offering them within the context of their life is critical. So all of us have become much more comfortable on video. And don't you remember when you had to do a webinar like even 3 years ago and you'd get on the platform and it was slow and cumbersome? We've all figured this out. And so things have moved and we're more comfortable. So our new use of video, our new use of voice, FaceTime or GoToMeeting or any kind of web platform is only going to increase. So the other thing that I forgot to mention is that of this 132 billion minutes, is that 107 or 108 billion of that are on the big five platforms, Amazon, Hulu, Netflix, Disney, and YouTube. Now, I want to talk to you a little bit here about, I've got some good stats here. All right, this is TD Bank. Now, TD Bank is a big bank, but the reason I want to talk to you about their chatbot service. They launched it in 2017. Now, it got a good start, and they've named her chatbot Clary. Now, I haven't quite figured out why, but each of the digital assistants that we hear out there, Alexa, Clary, Bank of America's Erica, they're all women's names. I haven't quite figured that out yet, but here's the point. During the pandemic, TD Bank realized, just like you, I'm sure you were getting just mounds and mounds of calls, people asking, are your lobbies open? What do I do here? They wanted to know what to do and how to bank during the pandemic. So what TD Bank did is they really launched up and amped up their capabilities in chatbot. So much so, now again, they're a much bigger bank, but consider the fact that they were able to deflect 1.7 million customer requests by engaging with people in their chatbot. That prevented those 1.7 million customers from having to sit on hold or wait for a call back from the call center. So what this is doing is making them more available, more responsive, in alignment with what the customer needs, and solving their problem or getting that data point or that simple question answered so that they're not angry at you for having to wait. So your investment in chatbot is critical going forward. How do you bank the post-pandemic consumer? Voice, video, chatbot, the use of data, understanding the trends in your marketplace, these things are critical. So how do you bank them? I talked so far about kind of the four pieces of the puzzle: demographic, technological, et cetera, et cetera. How do you bank them? Well, the first thing is you've got to understand them. What I've often said is that the greatest gift you can give to another human being is to let them know that they have been heard and listened to and understood. Your customers want to know from you that you get them, not through some, marketing platitude, but by you really demonstrating that you get the picture. So you've got to use the data that you have. You gather more data than anybody else: demographic data, how they're transacting, who's using the mobile app, how many bills they pay every month, who's late, what their credit score is, all this kind of information. And yes, I know it's in silos, and I know all the issues with core servers, but there's data that you have that you can use for actionable insights to better understand the picture that your customer is telling you about. And you augment that data with data that you can acquire. Maybe you get additional credit bureau information, or maybe you get the segmentation information that I told you about, where you append customer households. You've got to look at changes in customer behavior and which ones are temporary as a result of the pandemic and which ones are long lasting. So you've got to really tap into how people are feeling as we're coming out of this pandemic. In some ways, they're feeling a sense of optimism. In some ways, they're feeling a sense of concern. But either way, these are things you can help with. And your job, this doesn't need to be the role of the marketer. This can be the person in charge of ag banking or head of retail or IT. It's everyone's job to understand the customer. Now, US Bank. And again, I know that I'm giving you some big examples, but I'm doing it to prove a point of why they're using data. Now, US Bank continues to be at the front of the line for their great mobile app and their responsiveness. But what they've been doing, really, in terms of, I've got a lot of information here. What they've been doing is working with third-party applications so that if I'm a US Bank customer, I can aggregate some of the data in my financial relationships from other providers, thanks to APIs, and see that entire financial picture. If I'm Alex, I can see it all in one place, right? My checking and savings, but maybe I have a credit card somewhere else, and maybe I have a mortgage somewhere else. So the deeper, I'm going to quote here, the deeper these relationships get, the more involved in the financial lives we at US Bank can be, according to one of their chief data analytics officers. So data builds relationships because it helps you demonstrate that you understand them. So being data-driven is critical. And so if you are not looking at some of the hiring that you do and having people that are experts in data analytics and understanding the customer data and the customer journey, you're missing an opportunity here. So what's the next thing you need to do? You need to protect them. I mentioned about the trust is eroding a little bit, but still financial services, traditional banks and credit unions have still the strongest level of trust with their customers of any industry out there. But you need to leverage that. And one of the things that you need to do is you need to continue to keep their data safe. Using whatever technologies that are available to you for authentication and increasing security and biometrics. And you need to communicate with your customers and tell them what you're doing to keep their data safe. And we often find that most of our clients have the data and security protocols in place, but they're not telling their customers about it. So every time we hear a big data breach from Experian or Target stores or whatever, your customers get a little concerned. This is a chance for you to reassure them. This is a chance for you to reinforce the trust that they have in you. So you're doing a lot of these things. You need to communicate that. And this is okay where it's okay to toot your horn a little bit. So by giving them safe, secure ways to access their money, but also giving them tools to help them keep their data secure. Now, there's a lot out there in terms of fraud protection, and this is just Huntington Bank. And again, sorry for the big bank example here, but just as a way, they have what's called the heads up feature, where the consumer can keep a track on their finances, their credit score. They can set up their own alerts and keep an eye on their money. And if they want to set a credit card alert or a 10-day alert before their mortgage payments due, they can do that. They can set up the automatic funding or transfer to savings. But what they did is they also set up, in addition to this feature of heads up, they set up what's called Money Scout. And it's an AI-driven savings tool. And so far, since its inception, they have more than 10,000 customers using it. And those that have signed up, they're moving on average $100 each month into a savings account, in an automatic savings account. So by making it easy for customers to save, by making it easy for customers to understand their whole financial picture, by making it easy and helping them understand that you're keeping their data safe, you're doing them a great service. You're providing great service and you're building trust. Now, Fiserv, just before the pandemic, they launched their own version of kind of the interactive branch kiosk. Excuse me. And what they found early on is that, of course, the branch experience is going to continue to transform. So what they did is they created these in-lobby kiosks where customers could go up and they could have a degree of self-service. They could also see a member of the bank staff across the video screen. But my only point in saying this is that we're always looking at the right mix of self-service, assisted self-service, to total 100% service by a banker. And so Fiserv is one of many companies out there, NCR and a number of other ones, that are providing kind of an interactive banking experience called an ITM. Now, what do you need to do? You need to also engage people. So hence, you need to, rethink the role of the branch. And I'm not going to talk here about the branch of the future. I've done enough programs for some of your state associations on that. But what I am inviting you to consider is the idea of how we're engaging them. So we're engaging people on this device, obviously. We're engaging them across the video screen, maybe Zoom. Maybe we're providing subject matter experts because we can't afford to staff every branch with a mortgage person, an investment person, or a small banker. So we're using video as a way to provide that expertise across a very large footprint. And so you're using technology as a way to blend the experience. And so some of the branch experience is going to change with some of these kiosks that I mentioned, but it's also, you might have a dedicated Zoom room where customers, if they do come in, they can talk to a mortgage banker in a private conference room across the video screen. So we're also using AI to create a more humanized digital experience. And you have many institutions that are using regular feedback mechanisms to get input from the customers. So the way that you engage them is, again, you keep track of people through surveys and so forth. But what I wanted to share here is the use of in-app video. Now, again, this happens to be US Bank, but what they are expecting is to have 2 million co-browsing sessions this year. So what Umpqua Bank in the Pacific Northwest that really pioneered this concept, you're used to it now. You're using FaceTime, you're using Zoom. So it is not a leap, and the technology is already there. And it will be the expectation that they have of you is that if I'm inside your mobile app, I want to be able to click a button and I want to be able to pull up a banker and have a live conversation. And so what US Bank found is, again, he said, and I'm going to quote here, this is Tim Wealth, head of consumer banking. He said, "We love the idea that our customers can still see the welcoming faces of our local bankers without even needing to leave their home or business." Ladies and gentlemen, that's where we're at. The post-pandemic consumer wants this mix. They want the flexibility. Maybe they don't want to come and see you in person, but they do want to see you. So our definition of human connection, our definition of seeing someone face to face, also includes what you and I are doing right now. Now, surveys. I want to just make a quick nod to surveys, that it is important to get feedback. Now, you might have flown on an airplane recently. I was on Delta last week, and even the flight attendants, as you land, they're saying, in about 3 hours, you're going to get a survey from Delta asking, how are we doing? And you might think this stuff is schmaltzy and a pain in the you-know-what. But just to give you some numbers here, Bank of America does 90 million of these surveys a year, and they get roughly 15 million response. That is a huge trove of data. And what they do with that data, it allows them to take some of these insights and to change the real-time experience. Maybe it's inside the branch, maybe it's inside the mobile app, but you need to have an established, and if you don't, you need to create one, voice of the customer kind of program, meaning translation, getting regular feedback from the customers. You can pick them up, you can call on the phone, you can do Zoom, you can do a Survey Monkey, you can create a survey within your mobile app. But it's important to act on these insights and to let consumers know if you got a lot of suggestions about changing the drive-through hours or making the features on the mobile app better, that you tell them what you're doing. Now, finally, I'm going to say this right up front. Sales is a 4-letter word. Well, technically, I guess it's 5. I want you to quit selling people anything. They don't want your sales. As marketers, according to a man named Gary Vaynerchuk, the Gary V for short, he spoke at the Financial Brand a few years ago, and he said this. He said, "We have to romance customers and stop trying to close on the first date. Drop the sales voice," is what he's getting at. You need to create a personalized banking experience. The greatest gift, as I mentioned, is to let people know that they have been seen and heard. That is so critical. Think about it during the pandemic, how isolated people feel. And so as we've been coming out of that, we've been coming more into face-to-face. We are at a time where people want this personalized experience. You're going to use universal bankers more. Your bankers are going to need to be trained in everything, the deposit side, the loan side, the investment side. And you need to align the products with the real life needs of your consumers. So a few slides back, I mentioned, the level of debt that people age 60 or 65 are in. Maybe it's a reverse mortgage for them. You need to revisit the product suite. You need to be an educational resource for your customers and helping them and not selling them anything. Now, there's a customer journey, and this happens to be what's called a micro moment. Now, according to Google, what is a micro moment? A micro moment, and we have roughly 150 of them every day, you, me, and everybody on this call today. It is, I'm going to quote here, the micro moment occurs when people reflexively turn to a device, usually a smartphone, to act on a need to know, to go, to do, or to buy. And looking at these and evaluating these micro moments will allow you to tap into a deep insight that people might have that you can change. So understanding that we have these moments every day. Now, what I want to say about that is that I don't want a 30-minute sales pitch from you. I don't want a 30-minute pitch. Come in and meet with our personal banker. What I want is quick information. I want a 30-second soundbite. I want a 30-second video from you that explains how to use the new features in your mobile app. I want a short 300-word article about how to run the cash flow for my business, or whatever the case may be. So think sound bites, think small bites of information delivered via video, via voice, and maybe even via writing sometimes. So I want to just, as we start to close, I've got a few more things I want to say here, but I want to say the path to profit for financial institutions is changing. So as you can see from this slide, last year, the industry made over $31 billion in overdraft fees. And combine that with sometimes people's hate and anger of big banks, combine that with the Black Lives Matter, the protests, the social unrest, the George Floyd, whatever the case may be, that according to Brett King, and he said, and I'm going to quote him here in regards to overdraft, he said, it's not about doing the right thing. It is, you know that. It's about being seen to do the right thing. And in that nature, you have Ally Bank that recently announced that it's eliminating all of its overdraft fees permanently. You have banks like Huntington Bank and PNC that are having $50 thresholds. With anything under that, there's no fee. The point is this: you have to address the optics of one of the key drivers of profit in the industry, and you need to be looking broader at the industry as a whole and how you're going to make money going forward. But you have to address how consumers are feeling about overdraft. Now, satisfaction. People think, bankers think that what you need to do is give advice. Sometimes you do, but just 19% of consumers, according to J.D. Power in their retail satisfaction survey, said that they are interested in receiving advice from their bank. They don't want advice as much as they want help. So they don't want a 30-minute sales pitch from you, as I mentioned before. They want to sit down, they want to have a Zoom conversation. How can we help? So as we start to wrap up, I'm going to give you a little micro homework assignment, but I want to say this. According to Seth Godin, he said, our job is not to make the most money. Our job is to make the biggest difference. Now, what I'm going to do is I'm going to jump out of the screen here, and I'm going to ask you to write something down right now. You know, I gave you kind of 4 key trend areas in the demographic and the psychosocial and the technology and so forth. And we talked about things you can do about understanding people, helping them, protecting them. So I want you to take 15 seconds right now, and I want you to write down one thing that you are willing to take back to your bank or credit union and get started on doing in the next 30 days. And while I'm giving you time to do that, I'm going to check back with Trent and see if we have any other questions.
Hey, Joe. Yeah, thank you. We do have a couple of questions.
Okay.
The first one, I'll take care of it. We were just asked if the slides would be available to download.
Okay. Okay.
We will be loading the recording onto our website later this week, and then we'll also send out a link to those slides to the attendees following the meeting. So yes, rest assured that those will be sent your way. Now I have a couple for you, Joe. The first one, early on in the presentation, you talked about trust and you talked about the potential erosion of that trust. How would you advise people to maybe strengthen that trust with their customers?
Number one, stay in communication with them. I would do that simple survey, get a calling program together where you're doing nothing other than connecting in with your customers via Zoom, social media, chat, or phone, or in person, and ask them how they're doing. It's like those questions that I mentioned. What is one financial challenge or opportunity that you have right now, and how can we help? And tell me about the future and what your plans are. But the way you build trust is just like with your children. You're steady and you're consistent. And the way you build trust, as I mentioned, is that you share with them how you're keeping their data safe. You're sharing the tools that they have at their disposal through your bank to keep their data safe. So it's doing some of these things. Building trust is also about sharing small bits of helpful content that is relevant to their life and their banking experience. If they're a small business owner that owns a restaurant, sharing some helpful tips, sharing information about your PPP loan forgiveness portal or whatever the case may be. So steady, consistent actions, consistent feedback. And if you haven't done it, check in. And you don't have to do a formal voice of the customer program, but you could, but people want to hear from you. You know, even my banker at Chase checks in with me once a quarter, and we don't talk anything about money. And it's interesting. He just checks in, how's the business going, et cetera. So that would be my answer to the trust question.
Yeah, absolutely. That certainly goes a long way. And I've got one more for you here.
Okay.
Is there a number one big thing that you would recommend that we do first to bank the post-pandemic consumer?
Other than the things I'd mentioned, you need to get your digital house in order. And if you need to have a full online account opening and funding capabilities, if I go to your mobile app and I cannot open up an account, apply for it, open it, and even giving the information for it to go debit my other account to move my money over, you're at a competitive disadvantage. So according to Cornerstone Advisors, even they did a survey about what are some of the top technologies for 2021, and digital account opening was number one. So that is a must. You have to push your core. If you need help, then get your state banking association or Federal Home Loan Bank or the ABA involved, but that is a must.
Absolutely. Absolutely.
So I want to, again, invite people, if anybody wants to share what the one thing they're going to do in the next 30 days is, we've got a minute or two. I want you to unmute yourself and share with the group, what you're willing to commit to. What's your one big takeaway?
Joe, they may have to raise their hand and I'll unmute them.
Okay. So Jamie, if anybody does raise their hand, otherwise I'm going to start to say this, just to know that what I've done is plant some seeds with you. If you have any questions whatsoever, my contact information is on the back slide. You feel free to reach out to me. I'm glad to have any conversation with you if you feel maybe not as comfortable sharing it with the group. But look at this as a framework for how to look at your business situation and your customer situation and gaining more insights on how to bank them going forward. And recognize that the skills that you learned and the pivoting that you had to do and how flexible you were during the pandemic, you need to keep going on that path and keep doing it. So I want to thank you. And I want to thank everybody for listening. I realize listening to somebody for an hour these days can sometimes feel torturous. So I hope there's a nugget or two that came your way. And I want to thank everybody at the Federal Home Loan Bank for putting together this program and getting such a great group to participate in it. So with that, I'm going to say thank you. And Trent, I'm going to turn this back to you now.
Okay. Yeah. Thank you. And I think people certainly are getting that out of it. I know we're running over time here, but I just wanted to share with you a comment that was put in the chat box. It said, I'd like to add simple surveys on our mobile banking app and new website. Also keeping customers informed of recent cyber issues and what we are doing to keep them safe. So certainly sounds like a few nuggets were taken away from there.
Great. That is great. So thank whoever said that. Thank you for that. And I hope that everyone on here heard that.
Absolutely. And Joe, thank you for taking the time and being here with us today and sharing your expertise. We certainly appreciate it.